Happy Thursday out there, Team 42. It's your skipper here at Darius to present our macro minute for Thursday, November 14th, 2024. As always, we'll start with the executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions, as well as what specific changes you need to make in your portfolio to remain on the right side of market risk, you need to be a client of 42 Macro. So we'll start with today's key macro question, which is, will Powell rain on the stock market and crypto market parades? Our answers are, at 3 p.m. ET today, Fed Chair Jay Powell will provide his first detailed public remarks since last Thursday's FOMC event. In our view, Powell was correct to recently downplay the risk of another round of fiscal largesse from the Republican sweep, contributing to an accelerating inflation over the next year plus. We think Jay has been, and will continue to do whatever it takes to suppress volatility in the U.S. Treasury market, having learned his lesson from the regional banking crisis last spring and the near VAR shock in the Treasury market last summer. We believe the Fed will look through hawkish inflation developments like October CPI, PPI, and the federal budget statement until the Fed returns the policy rate to a more neutral setting. Further, we believe the Fed will likely continue guiding the 2% core PCE inflation in 2 to 3 years' time indefinitely, because that will help inflation expectations remain well anchored. We also believe the Fed will continue guiding to a lower neutral rate than is obviously appropriate for the structurally hotter Biden-Trump U.S. economy that no one else saw coming when we authored the resilient U.S. economy theme amid an inverted yield curve in the summer of 2022. Transitioning to our 42 macro dashboard, as always, we'll wrap up with a question from our community. This one's regarding the Bitcoin Act of 2024. So it says, Senator Cynthia Lummis recently drafted the Bitcoin Act of 2024 to create a Bitcoin strategic reserve for the U.S. Please do that. That would be awesome. The goal would be a total 1 million Bitcoin over the next 5 years with a holding period of 20 years, and claims that this would reduce our debt by 50%. She notes that the way we pay for this is to take the difference of 1970s gold certificates value and today's gold certificates value to purchase Bitcoin. She also states that this would have no effect on the U.S. balance sheet or nor new debt accumulated. Their questions would be, how does this have no effect on the U.S. balance sheet? Would the Federal Reserve print the U.S. dollars of difference between 1970s gold certificates and today's certificate values? Would this debase the U.S. dollar more or not at all? And would the U.S. have to sell some of the Bitcoin to eventually pay off 50% of the debt she assumes in her scenario? So some loaded questions there, but I don't think for starters, I don't think anybody has any answers to this because it obviously hasn't been legislated. So I'll just hypothesize what I think are the appropriate answers based on everything I think I know today, which obviously may not be enough. So number one, how does this have no effect on the U.S. balance sheet? It will have an effect on the U.S. balance sheet if the U.S. uses sort of a deficit financing to make those purchases. There's two ways that the U.S. sort of can put this money on the Fed. There's really only one way they can do it. They deficit finance it, and then it's the Fed's choice to monetize the deficit or not. And so if the Fed, if they deficit finance it, and the Fed does not monetize it, then it will have an impact on the U.S. balance sheet, at least in the near term, because they're making the purchases. It may have a net positive impact on the Fed on the U.S. balance sheet, public sector balance sheet, if and when they sell Bitcoin at ostensibly a much higher price later on down the road, and then they're not only canceling out the debt that they use to finance the purchase of Bitcoin, but then they have a net residual that's positive to pay down debt on the other side of that. So that's quite a clever strategy. Very similar to our friend Luke Gorman's thesis whereby the U.S. Treasury could potentially revalue its gold holdings and ultimately, capitalize the government that way. It's a very similar dynamic to that. Number two, would the Fed Reserve print the U.S. dollars of difference between 1970s gold certificates and today's gold certificate values? I don't really think that matters because at the end of the day, they're not going to be able to acquire Bitcoin from the private community unless they transact at the market price. They're not going to be, unless they force, I guess they could in theory try to force us to sell our Bitcoin in the same way they could confiscate our gold, just like they did in the 1930s. But again, to the extent that they want to have some sort of reasonably working relationship with the investor community, they'll probably have to buy it at market prices. And so I don't know. I really don't think the difference in those values really makes much sense at all, because Bitcoin could easily run up to 150, 200,000, and it could be well in excess of that difference. If they want to acquire the Bitcoin, they're going to have to pay the market price for the Bitcoin. Number three, would this debase the U.S. dollar more or not at all? We would assume that this is, it depends on how they decide to finance it. Obviously, they're going to have to, sort of issue debt, either bills or coupons, to finance the purchases of Bitcoin. But then the real rubber meets the road is, how does the Fed respond to this? Is the Fed going to monetize it, much like they monetize, I want to say 52% of the U.S. budget deficit in 2020 and 2021 when we were doing quote unquote pandemic related stimulus, and obviously the Biden stimulus on top of that. They monetized about half, a little bit more than half of that. The Fed could choose to not monetize it at all, in which case then it may not have an impact in terms of U.S. dollar debasement. Obviously, it's very likely to cause the dollar to be debased versus the value of Bitcoin, but it may not cause the dollar to be debased versus the value of other assets. So investors need to be aware of that. And then would the U.S. have to sell some of the Bitcoin to eventually pay off 50% of the debt she assumes in her scenario? So yeah, that's absolutely the case. I mean, look, if they acquire 1 million Bitcoin, which I'm not even sure what the total supply of Bitcoin is, and not that deep into the weeds. To me, it's just a squiggly line that goes up in risk on market regimes. Don't make it more complicated than that. If you go down a rabbit hole, you're going to wind up emotionally tied to the investment, and you're not going to sell when it's time to sell at the top of the market cycle in order to preserve your gains and have cash to buy at the bottom of the market cycle. There are a lot of talking heads who do what I do for a living that want you to be 100% long Bitcoin 100% of the time. And sure, that's great in a raging bull market, but it's not good when Bitcoin is drawing down 75 to 90% of its value like it is historically done every 3 to 4 years. So let me unbreak the fourth wall there. Yeah, so obviously they would have to sell some of that Bitcoin to eventually pay off the debt. Again, this is, quite frankly, I think this is really smart policy. This is if we have a debt problem, why not try to tackle the debt? There's two ways you can tackle the debt problem. One, you can grow your way out of the debt problem, which we've obviously very clearly proven unable to do so, as evidenced by Ronald Reagan being the number one and number two, his first two administrations being the administrations that caused U.S. growth to grow the most in the post-war era. Reagan's first term and Reagan's second term, I want to say his first term, public debt grew by 79%. Second term, public debt grew by like 60%. Again, if we were able to grow our way out of the debt, then why did Ronald Reagan accumulate like a 200% growth in the public debt? So if that's the case, this is the poster child of supply side economics. So very clearly, the U.S. has been unable to grow its way out of its debt. So the other way to grow your way out of the debt is to acquire an asset that appreciates a lot in value relative to the stock of the debt's value, and then use those gains when you book those sales to pay down the debt. Again, I think this is a brilliant policy, and quite frankly, as someone who's sitting with 10% of his portfolio in Bitcoin as a function of our systematic KISS portfolio construction process, maxed out in terms of our Bitcoin allocation, this would be great. So I'm rooting for it. Come on, Elon, stop paying attention to Doge and start paying attention to Bitcoin. Get this thing ratified so I can get richer. All right, we'll wrap it up there. Darius Dale presenting our macro minute for Thursday, November 14th, 2024. Everyone have a wonderful day out there. We'll catch you back here tomorrow. Cheers.